Welcome to the StockMiner.com here in the beautiful Black Hills of South Dakota. I'm your StockMiner, Brian Johnson. And a consolidation day today, so we are still wandering our way sideways. A very blah day for trading. Get these every now and then, so not a big surprise. We've had some pretty good volatility both to the downside, to the upside, to the downside. So we have had some movement. Least tradable if you're a day trader. Have a good feel for what you're doing there. But otherwise, just consolidating sideways in here, trying into that little wandering sideways I'd been talking about for a while. This little triangle look is starting to form up very, very nicely, and our lower and higher areas have not been broken yet. So, how much to talk about today from the standpoint of the markets themselves? You can see here the push down into support, bounce up. Now, once again, we're going to start maybe fighting with this 20-day moving average. This is what I wanted to watch all week long. Will we get back up there, retest it, break it, close above it? All this, this type of consolidation is right now, boy, still extremely neutral. We can really go either way here. You gotta wait for the break, guys. Be cautious. Don't get sucked into a guess one way or the other. Just let it break, allow it to do its thing, and make your move then. So we're still looking for breaks below here, and then breaks back above these highs up here. 12,250, really 12,300 if you want to be more cautious. I would tell you to get above, look at trades above here, and then kind of below this 50-day down here. I want to see what it's going to do when it hits those as well. Here's the consolidation on the NASDAQ. A whole mess of moving averages right in or around this spot right here. Just holding on, waiting for the next move. Breaks way down below here and above here. I think pretty much seal it both directions. You can see it trapped between the 20 and the 50, waiting to see. Broke the 20, held the 50, broke the 20 to the upside, broke the 20 to the downside, held the 50. Today, didn't get back to it, but holding the 50, just trapped within this range. I think it's pretty clear what we're looking at here. And this consolidation to the side is happening on all of the markets. Weekly, same type of thing. Still got a ways to go there, so we'll wait to see where that resolves itself by the end of the week. And the SPX, same type of motion. A down, then up, then down. I told you if you're going to be day trading or swing trading for any length of time, you might get your hands slapped a lot over the next few days, and you might find that to be the truth. Some of you might be jumping into some positions, and at the end of the day, going, "Well, that was dumb." I did that quite a bit early on in my trading, so I remember what that was like, thinking, hey, I'm not in the markets. If I'm not in the markets, I'm not making money, so I've got to get in the markets. I'm looking back on it, I'm not exactly sure what kind of rationale that really was, except really bad rationale. But more likely than not, it was always better if I didn't do anything during the day. Instead of losing $400, I'd end up not making or not losing anything, which ultimately made me $400. So I had to kind of change my way of thinking when it came to the psychology of what I was doing. Very important to think about that in this time right now. Just wait for the consolidation to break one way or the other and look for your entries off of that. We are stuck once again between the 20 and the 50 here. I think it's pretty clear where you could get some pretty good opportunities at some trades. Just a little bit of patience is definitely in the works here. You're going to have to wait. You can see the consolidation day we had today. So wait for breaks below or above. And then look at these lower levels now here. We've had lower levels that we've already broken. And now we're looking at deeper lower levels, and that'd be right down here in this 1275-ish to 1280-ish range, maybe 1275-ish or so. The VIX going nowhere, was down ever so slightly, but I don't care because it is still sideways overall. That's exactly what I'm looking for from the VIX. See if this thing will just hold sideways coming into the last few days, coming into the end of the week. We have not had a close above this channel that's held for longer than a week. Matter of fact, we haven't had a close in the channel I've got drawn here necessarily, except if you want to call this one at all. So last week we did. This week we're working on it. Very close, but still a couple days left of trading before we know for sure. Now, Apple was up. Probably the whole iPad 2 woohoo news that came out. You can tell it didn't make a big dent in Apple. I mean, it was up overall, but I mean, not really going anywhere. Now stuck between a range of about 348 and 354. So you're going to be watching for breaks up and above here. Maybe down and below here. You got to be really cautious, on Apple. It's very, very violent and can move either way very quickly. I'm still a little bit more apt to play this thing maybe up than I am down, but overall, as I am with the indices, very neutral on all stocks in this area here, especially Apple. It's stuck in kind of a consolidation mode as well. So we'll see which way it decides to resolve. Now overall, here it is, playing with the 20, above the 20, below the 20, above the 20. It can't seem to make up its mind. This usually and can indicate a big move in the works. Up or down, either way. Once again, I can't tell you that, but I'm just going to wait for the breaks. Then I'll make my move. Let the charts guide you. Let it take you where the overall price is going to and wants to go. Don't guess at this kind of stuff. I know it's easy to be bullish Apple. Why? Because it's great. It's a fantastic company. What's not to like about Apple? But even in the lifespan of Apple, we've seen it get all the way up to 200, and let's not forget how it made $90, $100. I mean, even the biggest can fall. So you just want to be cautious. Let the charts give you your direction. We're still holding this overhead area. I want to see if that holds by the end of the week as well. FAS coming down and landing where? Right on these lower areas of support. So we got that test today very early on, and it held and didn't really go anywhere. And overall, it was down 1.5%, but most of that move came in the first hour or so of the day. After that, boy, really tough to make a call down in here. Breaks below $30 were opportunities to maybe get short on the FAS, and it didn't. Well, I mean, unless you were really nimble, you may or may not have made any money on that. If you happen to be short, I would not recommend you staying in it above the 50-day moving average. So if you held overnight, crossing your fingers and your legs, hoping that things are going to work out for you, that's fine. But I would use extreme caution on any push to the upside, especially back above that 50-day. Back below 29, I really like that one. That's my more strong entry at this point for a short on the FAS. Might see this thing do what it did today with the 30, dip below 30 and get back above 30, but it's welcome to the markets. This is how this game works. So below 29, still I think good opportunity for you that want to go short, and then of course back above those higher levels for your longs. FAZ is now starting to actually, I know, believe it or not, start to get my attention here a little bit. Now the 60 has been very messy. It's once again following the markets going sideways, as I told you guys. I kind of expected things to kind of do over these last few days. We did get that action. It did actually play out that way, and now we're stuck in the same consolidation that we're waiting for in the markets. Let me show you something on the daily, though, that I like. I've told you I really like this thing up and above these areas. I'm very fond of it more above the 50-day moving average, and that is where I think I could get pretty interested in this little stock called FAZ to the long side. I have not been interested in this thing to the long side in I don't even know when. But now I might tell you guys, yeah, sure. You know what? I might start to get kind of interested in this. So above that 50-day is ultimately what you're looking at. You want to see if we can't get a break of that, and then your target above it's going to be that blue line. We bust that blue line and stay above that blue line, could be in for a very decent trade in FAZ. Once again, coming back from down here, coming up to revisit these areas after today. Now, let me remind you, it's in a consolidation. Don't jump. Wait. Let it do its thing. The only thing I hate with these type of stocks is they're very gappy, so I wouldn't be surprised if we maybe saw a gap up tomorrow. Of course, that would mean some sort of a gap down in the markets, but if we can get this thing to run up and through that 50, I think it's worth a shot. If you want to take a little bit of small long position, I think that would be well justified. I certainly wouldn't be slapping your hands for that. Okay, so overall, the market's still chopping sideways in the symmetrical triangle that I talked about. Lather, rinse, repeat, guys. Wait for the breaks. Don't jump into things. Use some common sense here within the markets. Keep your emotions down, all right? Don't get so excited about, man, I got to get in. I got to get in. Just tame yourself at that. Understand what you're doing in the markets. That's why, and this is why, I'm sure you guys get tired of me talking about it, but a mentoring course is so very important. It gives you confidence. When you're done with like my mentoring course, you will know why you're doing what you're doing. You'll know why you're getting into stuff. You'll know why you're getting out of stuff. When you know the why behind what you're doing, it's a lot easier to make decisions. You can remove a lot of the emotion from a trade when you know why you're doing something. I can't even stress enough how important that is. Changed my whole trading life when I figured out the whys behind what I was doing, as opposed to, well, I think this might be a good time to get in. Don't get caught in that trap. Get yourself a good education so you know why you're doing what you're doing. It's your money. It's your money. You might as well. There's never an education is always money well spent. If it's the right education, it's always money well spent. So instead of losing everything and then being out of the game, get yourself a good education so you know what you're doing in the markets. It pays for itself over time. Okay, I'll be back with you again tomorrow night. 2 more days before the end of the week. Let's see where this thing resolves. Maybe we wander sideways, but watch for, let's right, the brakes. I can't say it enough. See you guys tomorrow. Bye.